If you would have invested in gold 10 years back, do you know how much you would have earned? Gold had 14.7% annualized returns after adjusting for inflation. If you're looking to buy, then it's the best time to invest in gold and save something valuable for your retirement, education, or even for emergency needs, especially with increasing inflation on the horizon. Investing in gold is always a sensible choice, especially when the market is crashing. You must have noticed when the stock market is dipping or not doing well, people start to think about the possibility of a market crash. This is the time gold investors start to buy or invest more in gold because they consider it one of the safest investments that will not devaluate insanely, and in the long run has proven to give good returns. In this video, we are going to tell you 5 ways to invest in gold with their advantages and disadvantages. So, without further ado, let's get started. Buying gold physically. This is the most traditional and oldest form of investing in gold. Your parents probably did this often in their time as an investment. When you are buying physical gold, you can purchase it in the form of gold bars, coins, or in the form of jewelry. You can then use gold in your wedding or can use gold bars to get a home mortgage. There are multiple uses for physical gold which you can convert into cash at the time of need. But there are a lot of problems with buying physical gold. When you're buying it, you are going to own a commodity. That means you have to keep it in a safe place, in some locker, or if you're keeping it at home, you're always afraid of mischief or losing it. So, there are natural constraints on keeping it physical. And your cost may increase in the shape of insurance to safeguard your gold. The other problem is if you want to buy, let's say, for just $1, your jeweler or gold maker will happily say no or might think you are crazy. Buying with a minimal decimal of physical gold is not possible. You need to purchase it in fractions of an ounce or grams. While this is the age of getting everything digital, the more you think about physical gold, the more problems you will notice. So if you are not buying physical gold, then whenever you think about gold, you think about jewelry and gold bars. There is not much to think of, right? But not this time, when there's plenty of options to go around. Other than buying physical gold, there are plenty of other options available. So, let's discuss them one by one. Buying digital gold allows you to invest whatever amount you want without the constraints of physical gold. If you want to buy $1, you can. And you won't have to leave your home to purchase gold. So, the biggest advantage that comes with buying digital gold is you can break it into minimal decimals. Every month you can buy it with a minimum of your savings and sell it whenever you need. Do you remember there was a time when physical stock certificates were issued and brokers used to store a large number of certificates in their homes, offices, and other safe locations? And those were the times when a number of scams happened, and still it is happening, where there is a case of issuing physical stock certificates. Most recently, SEBI, Security and Exchange Commission of India, detected a scam where the physical certificates were purchased at a nominal value. The scamsters showed in books that the dividend was issued to the original owners, but it was shared among the management of the company. Therefore, a demat account was introduced that allowed the investors and the companies to issue their stocks electronically. The advantage of this method was, there was no need of storing the stocks, and it also reduced the risk of fraudulent activities. The same case with digital gold. One of the biggest advantages is that you don't need to store it, and it also reduces the risk of fraud. Some of the service providers even allow you to convert digital gold into physical gold. Now we've counted several pros of digital gold. The cons are spread and capital gain tax associated with it. The spread cost is the cost of storage and insurance that generally ranges from 3% to 6%. The other is the capital gain tax that comes with any other form of investment. So this is what you have to pay. We've started to know more about digital gold. Now let's look into some other options in the modern day where you can invest in gold. Invest in gold mining stocks, yes, rather than holding gold and taking the risk of owning it. Better buy the stock of a company that mines gold, and sometimes other metals. Warren Buffett invested in a gold mining company in the second quarter of 2020, purchasing 20.9 million shares in a company. A benefit of holding such a stock is that the value of the stock price moves with the prices of gold as happening in the international market. Look for some popular and reliable stocks that have a history of performance and management. Now the problem, yes. As we promised to tell you earlier in this video, you need to look for more reliable and consistent gold mining stocks. The problem with this option is the earnings of the company are also subject to its expenditures and incomes, and more importantly, how the company manages the operations. If the mining doesn't go well or the expenditures are more than anticipated, then it can significantly impact the earnings of the company. Just to give you an example here, Sibanye-Stillwater is facing problems with its income streams this year due to worker strikes and other domestic problems in South Africa. All those hurdles slowed down the operations in South Africa and impacted the earnings of the company. Investing in individual stocks can be risky, as we have seen in Sibanye-Stillwater. But you can go with another option to invest in gold. It is safer and less risky. It is gold ETFs and gold mutual funds. Investing in gold ETFs and mutual funds give you an extra cushion, much safer than individual mining gold stocks. The science behind ETFs and mutual fund gold stocks is similar to traditional mutual funds and ETFs. It has a bundle of gold mining, fabrication, and distribution of gold stocks. The biggest comfort you will get while going for pooled fund investment is that it is managed by a group of professionals. You don't need to pick or drop the stocks. Your fund manager will do this on your behalf and will pick the best that is suitable to investors. If you are a beginner investor, there are a couple of things to look at before going for such an option. Because ETFs and mutual funds are not directly managed by you but by your fund manager, they will charge their commission to handle your investment, and it can impact your internal rate of return. Another thing to look for is the liquidity position. Because gold is an illiquid asset and might take some time to quickly transfer into cash. You should know how quickly gold ETFs and the mutual fund can be converted into cash. In times of emergency, this kind of information can be really helpful, and we would suggest if you need some urgent cash in near future, then avoid illiquid options in ETFs and mutual funds. Now moving on to the last one, and guess what? When more than 46% of Americans have invested in cryptocurrency, and this investment turmoil has taken a toll than never before, then we thought to add this option as well. Gold and crypto might be an unusual pair when you have some traditional methods around. But yes, in the time of digital currency, you can invest in gold-backed cryptocurrency. The logic behind this method is simple. Digital currency is backed by physical gold, and the prices of that coin fluctuate with the actual movement of the gold prices. You can use gold-backed digital coins like any other coin. Unlike some other digital currency dipping prices, the gold-backed crypto is less volatile, as we told you before. It is connected with the physical prices of gold. The issue with gold-based coins is their base. It is still a new concept and has a limited investor base. And due to this limitation, there will be problems with liquidity. The other problem you need to consider is the financial position of the issuing company. The company needs to be financially stable. If not, there is no guarantee that it can pay you a handsome return. And as you know, the price is connected with the actual gold prices, so any fluctuation will also affect your income scale. For thousands of years and many to come, gold will remain a viable method of investing. If you have just started to invest, then gold can be a way to get your foot in the door and the world of investments. With inflation on the rise and our money being worth less every day, this is the perfect time to start looking into investing and hedging. Do let us know in the comment section what you think about this video. Till then, keep stacking.